Earlier this week, Tesla drops a Model Y performance in the United States. Ridiculous 0 to 60 time, 3.3 seconds, 155 mile per hour top speed, and over 300 miles of range. Lots of higher end features. I think it's safe to say that the Model Y performance officially identifies as a Model S. This was the last piece of the puzzle required before Tesla drops their new, more affordable vehicles. I've said it before, I will say it again. Model 3, refreshed, then the Model Y, the bunch of high-end and luxury features. Ventilated seats, quiet cabin, blah, 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 blah. These vehicles are moving further and further up towards the high-end, the luxury segment of the market, where Model S and X previously existed, paving the way for a much more affordable Model Y and Model 3 with enough points of difference, enough of a price gap, they feel like distinct products. And on that note, Ryan on X capturing some photos and tagging Sawyer Merritt of what may in fact, or almost certainly is, the new more affordable Model Y testing in Texas. A few aesthetic differences, more importantly of course, which we've yet to find out, but hopefully soon, is how much cost Tesla has been able to remove. Now I said at the time when Tesla was first mentioning more affordable vehicles, I can't fucking tell you bitches, that Tesla is likely to essentially start with a more affordable Model Y, whether or not it has the same name, irrelevant, where they can pull out some of the recently introduced higher end features like ventilated seats, the light strip at the front, the rear screen in the back and so on. And here we have what appears to be our first look at that new, more affordable Model Y. No light strip across the front, a more streamlined exterior, a different rear. And here are some apparent specifications discovered allegedly in Tesla's website code on the more affordable Model Y. It doesn't feature the matrix headlights of the refreshed Model Y. Has manually adjustable side mirrors. In other words, Tesla's figured out ways to pull a little bit of cost out. No shit, Sherlock. Currently, the world's best-selling vehicle, Tesla's Model Y, in the United States, long-range rear-wheel drive starts at $44,990. Let's just call it $45,000. Solid performance, range, features, functionality. It's an excellent fucking vehicle, hence literally being the world's best-selling. But not everyone can afford this. It's so obvious that if Tesla can keep the fundamentals of the world's best-selling vehicle, you strip out some of the costlier higher-end features like ventilated seats, interior lighting, and the rear screen, they can pull out a few $1,000s of cost and suddenly something amazing happens. A lot of people do not seem to understand, but this is really important. On screen now from ARK Invest 2023, vehicle price versus addressable market. This is a pretty good proxy for what percent of people potentially buying a vehicle can actually afford to buy a vehicle based on price point. Along the bottom here, we have hundreds of thousands of dollars starting at $125. And you can see between $125,000, actually between a few million, all the way down to about $75,000. We're talking less than 1% potential market share. This is the kind of price point the Model S, the Model X, the Cybertruck are hovering around. You're not going to break records in these price points. No matter how good your vehicle is, most people just can't afford it. Yet even as we approach $50,000 at most, we're still looking at just a few percent of the vehicle market. As I record this, Model Y is roughly here. At best, maybe you're looking at 4-5% potential market share based on its current price point. But watch what happens. The midpoint here, where suddenly we go from, call it 4, maybe 5% to around 15, then quickly to 20+% of the market. This is around $37,500. Please take a moment to let this sink in. There's a massive inflection point, call it $37,000 entry level, where suddenly the number of consumers who can afford to purchase your vehicle roughly triples. And if you already have produced the world's best-selling vehicle, despite it playing on giga hard mode and somehow defying the odds with a relatively high purchase price out of the reach of most consumers, and it's still the number one selling vehicle on the planet, and you can pull out some of the totally unnecessary but nice features of that vehicle, shave 10, 15 or so % off the purchase price, entry level, you will have unlocked not just a marginal or incremental increase in the number of consumers who can afford to and will buy your vehicle, but an exponential increase. I mean, just look at this thing. This right here, folks, is what Tesla's ultimately going to be targeting. May not be initially, but once they have a consumer product on the market that people can buy, compelling, safe, great performance, great features and functionality, 37, 35, 38,000, somewhere in that vicinity, look the fuck out. Everything's lining up perfectly. Refresh the Model 3 and Y, drive them further up in terms of features and functionality toward the ultra high end. Then drop the performance Model Y, the last piece of the puzzle, just as the EV tax credit ends in the United States, and then bam, drop a more affordable electric vehicle for consumers based on the world's best-selling vehicle. Pull out some of the high-end features that people don't need, they'd like, but are they really going to pay an extra $5,000 or so for them? Nope. Win. As positive as this is for Tesla's automotive business, just remember, who fucking cares? AI is where it's really at. Eyes on the prize.
Head of tech research. Why do you love Tesla so much?
Look, I mean, to me, look, the main thing is, my view is on the autonomous and robotics side. I mean, I think this now, when it comes to, it's going to be one of the best AI plays over the next few years. That's why we think it's going to be a $3 trillion market cap. But if
suddenly Dan's gone from potentially $2 trillion for Tesla to now 3. I mean, it's obviously just a matter of time. So this is the first analyst now who's getting within roughly 50% of what ARK Invest thought and got laughed at. And also starting to incrementally creep somewhat closer to the longer term goal laid out in the CEO Compensation Award for Musk in 2025, requiring an $8.5 trillion market cap for the final tranche, in addition to $400 billion of EBITDA. And spoiler alert, that ain't going to happen on the back of selling more affordable Tesla vehicles. It's going to be Robotaxi and the humanoid robot.
you look at the demand's turned around. I mean, this is a bounce back quarter that shows, yes, still more work to do, but this is now setting up for what I believe is going to be a historical 2026 because the AI revolution now comes Tesla.
Well, it better, because the lead of the show with Dan Veru,
yeah, that was great.
You're Dan Ives, by the way, he's Dan Veru, was that every small cap stock in America combined is still smaller than NVIDIA. Mm-hmm. The same is basically true with cars. Every major car company in the world combined, can leave a couple out, are the same size or smaller than Tesla.
It's almost as if, on average, typical investors seem to value Tesla as not just a car company.
The reality is that Tesla is not an auto company. I mean, I don't view Tesla as a car company. I think Tesla is truly a disruptive technology AI play. When I think about, because the future is ultimately autonomous. I mean, when I think about autonomous and robotaxis and what's going to ultimately happen in 30 to 35 cities in next year, that is $1 trillion alone from a valuation perspective in terms of a physical AI play. So that's why I think it's an apples to oranges what Tesla's doing in the rest of the auto sector. They're trying to play catch up.
Connect the dots, okay? I get the autonomous. I'm on the turnpike. I know where you live. You know where I live. I'm on the turnpike all the time. It's like demolition derby at this point. Cars are just going off in the woods. Everybody's on their phone. Half the people are stoned. I have no idea what's going on. I wish everybody had an autonomous car. I'm just going to look in the camera and say that. But we're a long, because then we'd all just kind of cruise along the same way. We're a long way from that, Dan. A long way. How do we get there?
Well, first off,
so in fairness to the CNBS anchor, given the typical investor time frame on CNBS and most people on the panel, which is a few milliseconds into the future at most, and an ultra long-term investor would be considered somebody who's looking beyond next week. In that context, yes, autonomous vehicles at scale could be a very long way away.
How do we get there?
Well, first off, when you look at Tesla, I mean, today, let's call it 15% have full self-drive in terms of FSD. We think that's going to go to 50% over the next few years. So from a margin perspective, from a software perspective, that's going to be a game changer alone as that happens over the next few years. But in terms of autonomous, I mean, it's our view, 80% of autonomous world is going to be Tesla in terms of globally. So when you look over the next few years, you're talking about, let's say, 2 million vehicles, 3. We're talking about, like, eventually you'll begin at 4, 5, 6, 7 million vehicles. I could argue when that doesn't even include robotics in terms of Optimus, that that together could be more than the value of the company today. So
he ain't wrong. In fact, I think Optimus at scale is going to dwarf Tesla's entire existing business and its future mass scale robotaxi business too.
That's our view. What's happening in this Tesla story is that the AI revolution, especially now with Musk back to being a wartime CEO, I mean, I think front and center, that's why we think $600 is probably conservative.
I don't know about I'm the car guy, and I can tell you what Tesla has done, and I've owned EVs, I've driven a lot of them. What they realized is weight is the enemy. Keep the car light, and you can get more range, because if you do what is it, Ricardo Montalban said, the fine Corinthian leather. The way that we've been sold luxury now, cars are heavy, weight is the enemy of range. I think that's why Tesla is winning against many other companies. Does this also go to your very bullish view and possible M&A target of Lyft?
Mm-hmm. I mean, we put out our M&A target. I mean, I believe Lyft in the next 6 to 9 months is ultimately acquired as a top acquisition candidate, because it's the view of autonomous. It's the view, whether it's a strategic, whether it's a financial buyer, Lyft is one. If you combine that with an autonomous play, I think that's the future. I mean, that speaks to really this convergence that we're seeing in tech, autos, and you could say energy and some other sectors.
Where do they fit, though? You got
Answer: in a coffin. They're cooked. Going back almost 6 years when I first started this channel, I've been saying most legacy auto companies, most EV startups would not survive the next 10 years. I stand by those statements. The answer is because Tesla exists and Tesla does not exist in a vacuum. There's still one company on Earth today producing electric vehicles at volume that makes money doing so. They're called Tesla. They also have the world's best-selling vehicle, the Model Y, which we discussed, and a more affordable version, almost certainly, of that exact vehicle hitting the market soon, and suddenly 2 to 3 times many people can afford to buy it. I repeat, Tesla, the only company making any money at all selling electric vehicles to consumers at scale today. And they're about to release an even more affordable vehicle. In other words, companies today can't viably compete with Tesla selling electric vehicles to consumers, period. I've also been saying for just as long, the same will be true of autonomy at scale. It will take time to play out. And autonomy is the future. You don't have it, you're fucked. But imagine having to compete with Tesla, who can put a Robotaxi on roads for a fraction the cost of any other company out there, any other platform. And I mean a fraction, half the cost, a third the cost, a quarter, a fifth the cost. And not only that, but they can themselves produce millions of vehicles per year, all fully capable of autonomy. And then imagine, in addition to that, they had developed a general solution to autonomy, meaning their software, with very little local tinkering and fuckery, could begin safely operating at scale just about anywhere, almost overnight. And imagine that no other company had such a general software. That is the current state of things. I can see this shit coming a decade away. It will take many years to play out, but I'm telling you now, if you expect legacy auto companies to be around 5 years from now, good one. Expect companies like Lyft to be thriving, Uber to be thriving in an autonomous future, Waymo. Whatever you're smoking, please save some for me. Want more content? Early access? Bunch of perks? Click the links in the pinned comment. AG1 is awesome. I've been taking it daily now for more than 3 years. It's a great way to fill in nutritional gaps. It's packed full of vitamins, minerals, and whole food source nutrients, plus has prebiotics, probiotics, and adaptogens to improve gut health, regularity, and help your body handle stress. I'm always looking for an edge to help me feel and perform my best, which is why I haven't missed a day of AG1 for more than 3 years. Just try it and see how you feel. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs.